Joining us now to pick a few areas of opportunity as the markets and the Fed try to figure out if inflation is here to stay is Stephanie Ling, Chief Investment Strategist and Portfolio Manager at Hightower and a CNBC contributor. Steph, good morning.
Good morning. How are you?
All right. Thanks. You know, the overall indexes have really held very steady near the highs. A lot of churn below the surface, though. Leadership swapping back and forth. Maybe a quarter of all S&P stocks down at least 10%. So where is that bringing you as you look kind of company by company in terms of surfacing some opportunities?
You know, it's a good question because it is company by company, because we've talked about all year long how there's been this massive rotation back and forth, value, growth to value. I don't really think today is going to be a big deal, quite frankly. I think the Fed is looking at two things. The PCE deflator is about where they thought it was, even last meeting. And the U3 unemployment is actually higher than where they want it to be. So I don't think you're going to see a lot of change. The current assessment in terms of language probably does change on the margin, and the dot plots probably change. But net, I try to find some stocks that are going to work either way. And so, you know, we can go through all of them, but I have Cisco, I have Halliburton, I have Capital One as opportunities just to stay diversified. Cisco
obviously is kind of in that older, slower growing, cheaper technology. What's the rationale for it at this moment?
Yes, and you know me, I always try to find some of the cheaper names. It's 17 times earnings. It's 2.7% yield. Look, it's been a laggard. It's only up 22% in the last year, and I think it's a reopened name, quite frankly, Michael, because you have enterprise spend that is about to recover. You have cloud and telecom spend that is about to recover, and that is as the companies ready their workforce and upgrade a data center switches, both in hardware and software. And I think that positions Cisco really well. Remember last quarter, their total orders were up 10% versus 1% the quarter before that. So we're starting to see some momentum. I think that's going to continue. They're making headway in software and security. They have 100% of the Fortune 100 companies in security. So I think it gets overlooked on that front. And I like that piece.
Yeah, obviously very financially stable as well. Now, Halliburton, interesting play. Part of the rationale for the bullishness on oil is that there's supply discipline, not as much drilling going on. What does all this mean for Halliburton?
Yeah, I mean, and I look at Halliburton relative to Schlumberger. It's really lagged. It's up 28% year to date, so it's had a nice run, but Schlumberger is up 56%, right? And I think you are going to see North America shale continue to recover. International also will recover. I think that's a 2022 story, and it's going to benefit both companies. But I think completions and production will be up mid to high single digits. I think drilling and evaluation will be mid-single digit growth. They've got $1 billion cost-cutting program, which could help margins 100 to 200 basis points. And again, as oil prices recover, free cash flow will recover. They can pay down their debt as well.
Now, consumer credit area has been very, very strong for obvious reasons. You know, consumers are flush. Default rates are very low. What does it mean for Capital One after the run it's had?
I know it's had a nice run. It's up 64% year to date, so it's sort of hard to buy it. But it's been flat since the middle of May, and so I think it's just taking a pause. We've talked about consumer all year long. Savings rate is very, very high. I think there's $2 trillion in pent-up demand. Personal consumption should grow 10% in the second quarter alone. And these guys, oh, by the way, retail sales, I know everybody hated that headline number, but retail sales is up 22% from 2019. So it's a diversified company. Their common tier equity is well above what they need it to be, and coverage ratio also. So I like their balance sheet. I like their capital levels. CCAR is coming. So I think that's still an opportunity there.
Shepard Smith here. Thanks for watching CNBC on YouTube.